Assalamualaikum and salam sejahtera to Madam Suhana. In this video, our group will present about Kamdar group and Berhad. Before we go through to the next slide presentation, let me introduce our group member.
Hi, my name is NurElisha Lyiana Binti Abdul.
Binti Azlan, and my registration number is 05D8019F1056.
Hi, my name is Siti Roziatul Natasya Binti Azli. My registration number is 05D8019F1995.
Hi, my name is Nurul Izzah Binti Rahman, and my registration number is 05D8019F1094.
I will explain business profile for Kamdar Group and Berhad. So the first one is Kamdar Group and Berhad is an investment holding company engaged in the import, export, retail and wholesale of textile and textile-based products in Malaysia. The second one is Kamdar Group and Berhad operates through textile and investment and also management segment. The third one is its stores offer textile and furnishing fabrics. In-house, they design garments for ladies, men, and children, and also they provide for Indian clothing and school uniform for students. The fourth one is the company is also involved in provisions of management services and letting out of properties and movable and immovable assets. For the last one is it operates for 29 outlets, and the company was founded in 2004 and it is headquartered in Kuala Lumpur, Malaysia.
Hi, my name is NurElisha Lyiana Binti Abdul. So in this video, I will give an explanation about the price-earning ratio for Kamdar Group and Berhad. A price-earning ratio is related to a company's share price to its earnings per share, and a high PE ratio could mean that company stock is overvalued, or else that investors are expecting a high growth rate in the future. To calculate a PE ratio, as you guys can see on the screen, Kamdar's share price of 0.24 is divided to earnings per share of negative 0.023, then we will get the outcome of negative 10.56% for the company.
Next, I will explain about price-earning growth ratio. In theory, price-earning growth ratio, a value of 1 represents a perfect correlation between the company market value and its projected earning growth. Price-earning growth ratio higher than 1 are generally considered unfavorable, suggesting a stock is overhead. Next, to calculate price-earning growth ratio, an investor needs to either look up or calculate the price-earning ratio of the company. The price-earning ratio is calculated as the price per share of the company divided by the earnings per share or price per share. Once the price earning calculate, find the expected growth rate for the stock using analysis estimate available on financial website that follow the stock. As with any ratio, the accuracy of the price-earning growth ratio depends on the inputs used. When considering a company price-earning growth ratio from a published source, it's important to find out which growth rate was used in the calculation. As we can see in this slide, this is price-earning growth ratio for Kamdar Group Berhad, which is have data point, source, and value. Value for price-earning ratio is negative 10.56. Value for net income annual growth rate not available. Value for Asia, especially retail industry, price earning growth ratio is 1.26. Value for Malaysia market, price earning growth ratio is 1.28.
So I am going to explain about the price to book ratio. Companies use the price to book ratio to compare a firm's market capitalization to its book value. It is calculated by dividing the company's stock price per share by its book value per share. The price to book ratio of Kamdars are shown as in the table. So the calculation for price to book ratio of Kamdars are Kamdar price per share divided with book value per share, which is 24 cents divided by 1 ringgit and 10 cents. It is equal to 22 cents.
Now I will explain Kamdar Group and Berhad return on equity. Kamdar has a negative return on equity which is negative 2.1% as it is currently unprofitable.
So, move to return on asset. Return on asset is an indicator on how profitable a company is relative to its asset. To calculate return on asset, total net income will be divided to total asset. Return on asset gives a manager investor analyze an idea as to how efficient a company in management is at using its asset to generate earnings. You can compare the ROA of company and industry. Company is negative 0.6% and industry got 5.9%. So the next one is return on capital employed. Is a financial ratio that can be used in assessing a company profitability and capital efficiency. To calculate ROCE is equal to earning before interest and tax and divided by total asset minus current liabilities. You can see in the image below that how Kamdar Group Berhad compared to last year's and 3 years ago.
Next, I will explain about financial position analysis for Kamdar Group Berhad. As we can see, this is a financial position analysis for Kamdar Group Berhad, which is have asset and liabilities for short-term and long-term. Value for short-term asset is Rm 143.50 million. For liabilities, Rm 59.98 million. And for long-term asset is Rm 187.82 million. And for liabilities, Rm 52.76 million.
So now I am going to explain about the balance sheet. In order to understand what makes up a balance sheet, we need to define a number of terms. Let's begin with the asset side of the balance sheet. Assets are categorized in two groups. The first is current assets. Current assets are that are expected to be used within 1 year's time. They include things like cash inventory and accounts receivable. The second category is non-current assets. Non-current assets are expected to last more than a year's time and include things like property, plant, and equipment. We arrive at the total asset of the business. This forms the left side of the balance sheet, which must equal to the right side of the balance sheet. Moving on to the right side of the balance sheet, there are two categories which are liabilities and shareholders' equity. Liabilities are what the company owes, and just as with the asset side of the balance sheet. So based on the Kamdar's balance sheet, as you can see, it starts with the inventory, which is 130,300,000, followed with physical asset, which is 125,600,000, and next is long-term and other assets for 62,200,000, and the next one is account receivable, which is 1,600 million, and the last one is cash and short-term investment for 5,600,000. And for the liabilities and equity side, it starts with equity, which is for 218,000 million and 700,000, followed by debt for 83,900,000, and then with other liabilities for 18,300,000. And the last one is accounts payable for 10 million.
That's all from us. Thank you.